All right, traders, the green streak continues. The analysis that I posted on the SPY yesterday was 100% spot on. Here's what I had to say about the SPY in the pre-market. I'm also going to be sharing with you the newly updated plans heading into tomorrow. We got the best setups at the best prices, and there's going to be some very lucrative trading opportunities, so make sure you stay to the end. So in terms of what I had to say this morning in the pre-market, you guys already know I was anticipating a gap down and I was bearish. We had members within Trader Society who decided to swing trade puts from Friday. Big shout out to Top G. He was one of them. He ended up making a very, very nice return on those. But the phase one was SPY was expected to gap down, which we identified using the daily chart. As you can see, the SPY ended up gapping down very, very nicely. Then I had stated if you were to swing trade puts, make sure you take profits at market open, because we were anticipating a bear trap to get created at the market open, and a break above 403.50 would send the SPY to fill the gap at 405.68. I did end up scalping call options to play for the gap. I made a 30% profit return on those calls, nailing the bottom when it dropped from 404s to 403.40. I bought the dip, and it was a 30% return very, very quickly. And with that being said, SPY nearly filled the gap. And then in terms of the bull trap that was created, we were expecting a bull trap to be created once it filled the gap. There's a gap to fill at 405.68. The best trade is to buy puts to short the SPY once the gap fills. Now, the reason why I decided to not buy puts is because it did not fill the gap. As you can see, the gap was at 405.68. It got to a high of 405.13. So it partially filled the gap, and it did start to have that big sell-off. We did have some members decide to play puts on that. I was mainly focused on calls and dips today, and overall I did very, very well buying the dips. You could have also done extremely well shorting the rips, especially when SPY partially filled the gap and began to have a reversal. So with that being said, if you got great entries and you were scalping in and out, this was a great day for not only calls but also put options. So I'm going to show you how to trade the best setups at the best prices. How is it possible that we have plans that are so accurate like this? It's because I'm trading the chart. All of my trades are generated based off the chart history repeating itself, based off of patterns, based off the unique gap trading strategies. It's not by following other traders. It's not by studying the news. It's by trading the chart. And I'm going to show you how to open that third eye so you can master trading the chart, right? So what I'm looking at is we're at key support. We're at key support, and there's a gap to fill above, right? So what I want you to understand is heading into tomorrow, this is make or break. This level right here, $400.59, the closing price, previous closing price, that's our new gap level. Right now, the SPY is trying to gap up. It's at 401.49, so we'll see how it opens towards the pre-market. Now, I will say this. If the SPY gaps up and you see a floor, you see support forming at $400 to $400.59, and it's reacting as support, you see bullish confirmations, it's going to be calls, and you're going to want to be call focused on the dips. Now, if the SPY gaps down and it shoots back up to the previous closing price and $400.59 is reacting as a resistance, then you're going to want to play puts with a max risk of 401. So here's how I'm kind of looking at this. I'm already viewing it as if it gaps up, I'm interested in calls, and I'm interested in calls at $400 to $400.59. If it gaps down, I'm interested in potentially puts, but we need a very strong bearish confirmation at $400.59. Now, what I want you to understand is a major micro bull or bear trap is about to create it. And I believe it's very, very likely to work in the side of the gap. So if it gaps up, I think it's going to be bullish. If it gaps down, I think it's going to be bearish. But what matters on top of that is how it's reacting. If you see it reacting as support, as a floor, then you need to be long biased. If you see it reacting as a resistance, then you need to be short biased. Now, I will say this in terms of puts for the micro, it's not the most attractive thing to be doing, especially if the SPY gaps up. And the reason why I say that is if it gaps up, it's high probabilities that we bottom at this $400 and we start to have a gap close reversal and pump back up. And also the best price for puts is still at $405.68, right? If the SPY gaps down tomorrow, if SPY gaps down tomorrow, $400.59 will be make or break. It's just a lot more attractive to wait for the bears to get trapped again and then play the puts at this higher gap at 405.68. So my mindset heading into tomorrow is if we gap up, I'm more long biased and I'm looking for a floor at the previous closing price for calls. If we gap down, I'm leaning towards short bias. I'm leaning towards micro bull trap, but I need strong confirmations at $400.59 and I will not get trapped. If it goes to 401 and works against me, I get stopped out and I will look to play puts at 405.68. That's how I'm viewing the market right now. I'm looking at the daily chart, and what it's telling me is, it's telling me in terms of this candlestick that has formed, it is truly make or break. If it's going to be a bull trap, then I would need to see this gapping down and I would need to see strong resistance at $400.59. That would start to send SPY to the next overall support zone, which is going to be all the way down here towards this 397.50 level to 396.50 level, in between that zone, if it can react as a bearish top and preferably gap down and then react as a bearish top at $400.59, right? But in terms of the bear trap, that can strongly be created if $400 turns into a floor, and especially if SPY gaps up and it's forming that support at $400 to $400.59. So I'm just going to be very blunt about this. $400.59 is make or break. It's likely to favor the bulls if it gaps up. If $400.59 ever reacts as a floor and it pushes above 401, there's no reason for puts. You will get destroyed, and the best level for puts would be at 405.68, right? So that's what I'm looking for. I'm going to be analyzing if it gaps up or gaps down, and there's two possible outcomes that I want you to understand. It's not going to be anything in between, in my opinion. So the first outcome, look at the candlestick right here, see how it kind of looks bearish, but it's at support and it's at previous resistance, right? So see how it looks kind of bearish right here. Look at what happens. It bottoms at the previous closing price and it rockets back up, and SPY has a gap to fill at 405.68. So don't be a bear that gets trapped at support. Puts already printed very, very nicely today. The most likable outcome, and preferably if you were bearish, would be to wait for the gap to fill above at 405.68 to replay the puts like you had the opportunity today if you decided to play the partial gap close reversal, right? Now, in terms of the other possible outcome, and again, this is another example. This bearish candlestick right here is at support, and then the SPY bombs at the previous closing price, it pumps back up. See how I'm analyzing what the chart is telling me, right? So that has happened several times throughout the history, and I want to be the one that brings awareness to that, right? Now, in terms of your other possibility, you can see it's kind of similar right here. So if the SPY ends up gapping down, then the best price would be $400.59 for puts, with the max risk of 401. If you get stopped out, then the new best price is 405.68. That's how I see it. And I'm telling you, I'm seeing a lot of bear traps that are getting created at this level and at this candlestick. So it's truly make or break, man. Again, this is like that same type of candlestick in a sense, and this time reacted bearish. So we're just going to have to see. We're going to have to see if it gaps up or gaps down, and then we're going to have to see if it can form the floor or not. You already know my end of the spectrum, right? So if I see this react very, very bullish and it gaps up, I'll be interested in calls towards the gap at $400.59 with a bullish confirmation. In terms of max pains, if you do end up doing calls, the max pain is at $399.50. That is the max pain. The zone is $400 to $400.60. If you do end up doing puts at the lower level and it does gap down and you see the roof forming, then the max pain is 401. If you hold past the max pain, you deserve to get trapped and you deserve to lose big. I do not hold options for a very, very long period of time. I scalp options very, very quickly. In terms of some of my best scalp trades on the day, when SPY had this big pullback right here, it had this very, very nice pullback to 403.40. It topped at $404. It pulled back to 403.40 at previous resistance, reacting as support. I scalped calls, instantly made 30%, playing for the gap to fill, right? And I did not play puts because the gap didn't fill. So in terms of partial gap close reversals, if you're going to play them, you're going to want a strong reason to be bearish ahead of the trade, and you're going to want to make sure that you're getting in very, very close to that gap that's filling, because the further it is away from the gap, the more risk you are exposed to that trade. So that's how I'm seeing it, man. In terms of tomorrow, there's no in between. We're either setting up for a very, very nice bear trap or in a very, very nice bull trap. What's going to help me determine that tomorrow is if it gaps up or gaps down, and if it forms a floor or if it forms a roof at $400 to $400.59. It's going to be very, very simple. You don't have to be right the first time, and you must adapt. If it's reacting bullish and you decide to buy calls, then it flips bearish, you must get out. That doesn't mean that you have to switch to puts. You can and try to make money that way, but you must adapt. You must respect your max pain. Do not be arrogant. Do not be ignorant and hold past your max risk. We are scalpers. I am giving you the best levels to be trading at. If it cannot work at this level, there's no reason to be in the trade, and you deserve to lose big holding options against your max pain. So it's very, very simple, man. I'm trading the best setups to the best prices. I'm not risking a lot on these trades. If they start to work against me, I get out quickly. If I like, I can switch sides, or I can just wait for the next opportunity, right? So what we know is $400.59 is make or break. The gap up or gap down is going to help us determine whether it's bullish or whether it's a bull or bear trap heading into tomorrow. And that's going to be make or break. So, if it reacts to support and gaps up, we're going to start to fill the gap at $405.59. If it gaps down, reacts as a resistance, we're gonna start to drop to $397.50 to $396.50. Those are the overall ranges. Those are the overall targets. Your true best level for puts, and the best thing you can do with puts from here is to wait for the gap to fill at $405.68. That's how you need to think, right? If SPY gaps up and there's a floor at $400 and it's forming support, they're gonna try to trap the bears, and it's gonna start to rocket back up to fill this gap at $405.68, which is when then the bull trap's gonna be created. But guess what? If you're going to buy puts at $400 into bullish confirmations, into a floor, into a gap up for no apparent reason, or if you buy puts because it looks bearish and you don't respect your max pain at $401 and you hold, you don't have the opportunity to buy puts at $405.68 because you're losing big and you're wasting your money. You must put yourself in competence as a trader. You must trade the best setups at the best prices. We all know the best thing we can do for puts is to wait for that gap at $405.68, right? So with that being said, it's make or break. I'm looking forward to it. It's going to be an overall one-sided move, either bull or bear trap tomorrow. I think it's going to be fairly easy to determine. You do not have to be right the first time trying to determine this level, and it should be a phenomenal green day for us, man. The win rate does not matter. We cut losses quickly, and these percentage returns on these scalps add up. You could have literally scalped calls on nice dips and puts on nice rips for the entire day, and that adds up very, very quickly. Boom, 20% there, 30% there on same-day expirations. The win rate does not matter. You have to cut your losses quickly, and the gains of the percentages really start to add up within time. So with that being said, that's my overall analysis. That's my overall thesis. That's my view, and that's where we are in terms of the market. And if this does spike back to 405.68 tomorrow, the most likable outcome for swing traders is going to be puts, in my opinion. So that can be a potential swing trade where if it does spike up to 405.68, I may look to do puts. I have to see, right? So we got some great day trading opportunities coming up, and we got a great swing trading opportunity coming up. It should be an overall one-sided move type of day, right? And if the trend's bullish, you're going to want to focus on calls on nice dips. If the trend's bearish, you're going to want to focus on puts on nice rips. $400.59 is make or break. It is our job to identify if a floor or if a ceiling, if a roof is forming at that level. It is our job to adapt if the trade starts to work against us, and if we decide to enter it, to cut our losses quickly, respect our max pain, and then if we want to, we can adjust accordingly and switch sides, or just wait on the sidelines for the next trading opportunity, which would be at that 405.68 level. With that being said, I want you to focus on the overall trend once determined, calls on dips, puts on rips. It's going to be a very simple trading day. I will see you guys tomorrow live at Market Open. We're going to absolutely crush it. If you do want to be a part of Traders Society, now is the best time to join the team. It's going to be that first link down below in the description. It is a one-time fee. You get lifetime access to the chat room. You get lifetime access to the live trading streams that we do. You get lifetime access to the key analysis, the watch list, the stock analysis, my updates, before the market opens, after the markets close, during the market hours. You can ask me any question you like about stocks, about trading, about options. It is all within that program. It's an all-in-one solution to mastering this gap trading system that we've created. Now is the best time to start trading options. It has never been easier to be great because people are not trading the charts. I'm going to show you how to open that third eye and how to master these charts. I'm telling you, man, if you focus on trading the charts the way I do, you won't need to follow anyone. you will start to see that all I'm doing is trading the chart, using these confirmations, using these patterns, and I'm going to help give you that third eye to do that. So with that being said, if you do want to be a part of Trader Society with the networking opportunities, with the Discord, with the live trading streams that we do, with the real-time trade alerts, with the networking opportunities, with the course, with the video lesson library of 100 hours of content step by step, there's so much more to it. If you want to get started learning now, it's the best time to get started. It's going to be the first link down below in the description. I will see you guys tomorrow live. We're going to absolutely crush it tomorrow.